The following podcast was recorded on Wednesday, February 28th, 2024, featuring Jim Bianco of Bianco Research. To hear the podcast in real time, you can sign up for a free trial at biancoresearch.com or arborresearch.com, or by emailing Gus Handler directly at gus.handler@arborresearch.com. You can also call Arbor Research and Trading at 1-800-606-1872. Thanks for your time and enjoy the podcast. Welcome everyone to the latest Talking Data. I'm Kristen Radosh with Arbor Research and Trading, joined today by our commentator, Jim Bianco of Bianco Research. Welcome, Jim.
Thanks for having me.
Today, Jim explains what's going on with the Bitcoin ETFs. Jim, to start us off today, what are the Bitcoin ETFs?
Yeah, it's like consumed everybody, and it is basically not only broken every ETF record in the first 6 weeks of trading, but they've broken it by orders of magnitude. So about 2021, so about 2.5 years ago, we got Bitcoin ETFs tied to the futures contract that trades on the Chicago Mercantile Exchange. So those ETFs owned actual futures contracts. What we got starting January 11th is we got 9 Bitcoin ETFs that own actual Bitcoin. And on the 10th, we got a conversion of the grayscale closed-end fund, which had been around for several years, into a ETF. So we got 10 of them directly. They have taken off like we've never seen before. So if we go to the first chart, it shows you the flows that these ETFs have gotten. And their total flows have been about $6 billion over the first 6 weeks, or about $1 billion a day. And you can see some of these flows are huge, especially for a brand new ETF, and especially considering that these ETFs are largely not on most wealth advisors platforms. So a lot of wealth advisors like Vanguard and some others are not yet approved to trade these. And so it has largely been retail interest that has taken it off. Now, of that $6 billion, if we go to the next chart, there's been a big divergence in how you've gotten there. So this is sort of shows the same thing. The black line shows you $6.37 billion of net new money, but that big red part in the bottom is the Grayscale Trust, which converted, of course, from a closed-end fund. The Grayscale Trust charges 150 basis points a year management fee for their fund. All the other ones charge somewhere between 12 and 35 basis points, but they've waived those fees for the first 6 months or at some level of assets that they get to. So they've been dramatically lower. And yes, we know about ETF buyers. They're highly price sensitive when it comes to fees. So you've seen $7 billion come out of the Grayscale Trust. You've seen about 13 or 14 billion dollars go into the other 9. Now, presumably, a lot of that 13 billion was the 7 that came out of Grayscale. It shifted into a lower cost fund to give you that net of 6.73 billion. And you can see that 6.5 billion of that number has gone into the BlackRock IBIT as its symbol, or the iShares fund. The green line, 4.48 billion, has been Fidelity, and then the orange is the Valkyrie fund, and then the blue is the Bitwise fund. So those are the 4 big ones, and then the other 5, they're still there. And what's interesting about the other 5 is if you ask some of those managers that are among those lower 5s, how is your fund doing? And they would tell you 2 things. One, they would say, for all of the funds that we've ever run out here, this has been the most successful fund that we've ever done in the first 6 weeks. But we're like 1/20th of what IBIT has been, or 1/10th of what Fidelity has been. So you see those little bars in there, or little areas, and go, wow, they're not very successful. Actually, if you just compared them to any other ETF, it's been wildly successful. It's just that they haven't just transformed the industry like the other ones have. And if you go to the final chart, it shows you where the asset levels are. So there's the top panel shows you there's 44 billion in Bitcoin ETFs right now in total. And that breaks down into the bottom panel, showing you that you've got something like 25 billion still in the Grayscale Trust. That, remember, was a closed-end fund, which had a peak about a year and a half ago or 2 years ago at around $42 billion. So it still is 25. So let me back up. It started as a ETF on day one with, as this chart shows, $28 billion on day one, because it was a conversion of a closed-end fund, and all those outflows offset against the rising price has gotten it down to 25 billion, and then everything else has gone from 0 to 20 billion. And for 9 funds to go from 0 to 20 billion in the ETF business, not only is that a record, but it's like I said, orders and orders of magnitude larger than anything we've ever seen in any kind of ETF launch. Interestingly, the old records were held by a bunch of the Bitcoin futures ETFs, and now they've been thoroughly smashed by the spot Bitcoin ETF.
So Jim, how big are they?
Right, so this is a big issue. So if we go to the next chart, and it really goes to what I think we're seeing in the price and everything. So how big is Bitcoin right now? So this is the market cap of Bitcoin back to 2015. And through last Friday, it's a little over $1 trillion. That was last Friday. It's rallied some more. It's about a little over 1.1 trillion if I was to update this chart into real time. And its peak was 1.2 trillion back in November of 2021. And so we're over $1 trillion in it. But if we go to the next chart, we have to keep this in mind. Now, this comes from Glassnode. Glassnode is an online analytics firm, on-chain, analytics firm. They look at the Bitcoin blockchain. Remember, everything that happens in Bitcoin or any other a blockchain, you can have what's called a block scanner, and you can look at every transaction, every wallet, every coin, where they've been, where they go, why they've gone, and everything. So you get incredible detail, and firms like Glassnode will aggregate this data. So they put together what's called the HODL waves. HODL is the crypto term for holding. And what this shows you is the number of coins, or the percentage of Bitcoin outstanding that has been in the same electronic wallet for at least a year. Has it moved? So that coin has been in a wallet and it hasn't moved. That's about 30% of Bitcoin. The other 70% of Bitcoin is in wallets that it has been there for over a year. Some of them might be because the passwords were lost or the owner died. Remember that with self-custody in a Bitcoin electronic wallet or any kind of crypto electronic wallet, you're responsible for what you call your private keys or your seed phrase or your complicated password. You lose it, you're gone. There's no 1-800 number to call to get recovery or anything like that. And so a lot of those might be gone. A lot of those might have been hacked. A lot of those just might be hodlers. Probably the majority of them are. They own them long term. I do own some long term too, and they intend on continuing to hold it. So 30% means that the effective float is about $300 billion in Bitcoin right now. Well, almost 20 billion of that has gone into these funds in the last 6 weeks. So in the first 6 weeks of Bitcoin, it is hoovered up 8% of the effective float. That is an astounding number to see it hoover up that level of numbers. So if we go to the next chart, the next chart shows you kind of an idea of where we're going with the turnover. So the blue line on this chart shows us what's called on-chain volume, or the amount of transactions that take place on the Bitcoin blockchain. Some of them might be transfers, some of them might be trades, but we just know that they're transfers. And then the orange line is the dollar volume of the ETFs, and the black line on the bottom shows you what percentage of the ETF is of the on-chain volume. It's been averaging about 8%. So it's about 8% ownership, and it's averaging about 8% of the transactions. This is huge for what's been going on in the Bitcoin space. Another way to look at it is when all the blocks are transacted every day on Bitcoin, the miners that do that will get paid something like 3.25 Bitcoins per block that they transact. And that's going to halve in May down to 1.6 Bitcoin or so. And so they get about 900-ish Bitcoin a day in terms of doing the transactions or processing the blocks. Well, the Bitcoin ETF yesterday hoovered up 12,000 Bitcoin. So if all of the new supply of Bitcoin is 900 a day and it keeps hoovering up 12,000 a day, the float keeps shrinking on this. And this is why I'm in the camp that I think a lot of other people are coming into the camp. There's only really one fundamental with Bitcoin for the moment, and that is the flows into the ETFs. That is driving the price. The price is not the flows are not reacting to the price. The flows are driving the price because it's only a $300 billion market. And with this level of activity after 6 weeks, it's when everybody rushes in to buy, it goes up. When they rush out, it goes down. So this has been why everybody's been so enamored by it. And so, it's a chicken egg argument. Which one is it? Are we reacting to the higher prices, or are we causing the higher prices by putting money into the ETF and then getting excited because they went up and putting more money in the ETF? I think it's more that latter, that we're causing the higher prices.
So what are some of the concerns?
Yeah, there are always concerns. And I've been, if you follow me on Twitter, the crypto community's all over me because I have not been 100% bullish on this. And let me back up and remind everybody, I am a long-term bull in the crypto space. I have been for 7 years. I'm a holder of coins, and I will continue to be a holder of coins. But I can hold two opinions at the same time. Long-term, I think this space has a lot of promise to build an alternative financial system that especially the third world needs. Asia, Latin America, Africa, the Middle East. Billions of people live in countries with shaky currencies and unstable banking systems. The West, the developed world's had 150 years to bring them a stable banking system and better currencies, and they have not been able to do it. So I think that this alternative financial system that is permissionless, that I can own my coins, my government can't take it away from me, I can't be told what I can spend it on or can't be spent it on, and a sound type of money like a hard cap that Bitcoin has, or the deflation that Ethereum has since it merged to proof of stake, it's actually been seeing the number of Ethereum fall, is a very enticing idea. I think what the space needs is more development to be able to bring this to the masses. One of the concerns I have about the Bitcoin ETF is you listed on a regulated exchange, trades on a regulated stock exchange, the New York Stock Exchange, and the SEC oversees all of this. And all of a sudden, the floodgates open and everybody rushes in. I hate to say it to my Bitcoin friends, but it represents the failure of the failure of the on-chain system, the failure of the centralized exchanges, like the Coinbases of the world. We've had for 15 years the ability to go out and get an electronic wallet, or go out and get a Coinbase or a Kraken or a Gemini account, and be able to transact in Bitcoin through that. We needed to do it. But the minute that we brought it to regulated exchanges, everybody flooded in. And so what they're telling you is, that system you have with those centralized crypto exchanges and that decentralized electronic wallets, well, I'll use a technical term, they suck. Nobody wants to use them. That's why you see all this money flooding in to the centralized exchanges. The other problem I have is that I fundamentally think that there's a problem with a decentralized asset having centralized ownership within all of these ETFs. It runs against the purpose. It does put the owners in a powerful position to maybe influence these blockchains or these coins. Look, people say to me, they can't do anything about the blockchain. Yeah, but they could threaten to leave. They could threaten to fork it and maybe go to proof of stake, a Bitcoin proof of stake, because BlackRock likes ESG, and then they'll bring all their money with them. I mean, maybe they won't do that, but they have influence. And if they have influence with the SEC over them, you're defeating the purpose of a decentralized exchange. You're defeating the purpose of a decentralized currency like Bitcoin. So if somebody in Venezuela or somebody in Africa owns it, the government can't manipulate it or take it away from them. And they can't do it to us here either. But if you do centralize it, you run that risk. And so Charles Hoskinson, the creator of Cardano, said it well. You're letting the vampires in by doing this. I tend to kind of agree with him. So that's one of my other concerns. Another concern I have is if you go to the next chart, the last one in the list, the blue line is the same blue line I showed before, the market capitalization of Bitcoin. The orange line is the S&P price, but to keep it consistent, I show the market capitalization of the S&P. And the bottom chart shows the correlation between the two on a rolling 20-week first difference basis. First difference, take the weekly changes and correlate those. And you'll see that since about October, when everybody got all excited about the Bitcoin ETF coming, the correlations jumped. The only time we saw it higher than this was right at the peak in 21. By sucking it into the current system, it's starting to trade like a risk asset. It's starting to look more and more like stocks. Sure, it's more volatile. It can go up a lot more. It's got a 3x beta of the S&P 500, but we also have 3x beta ETFs. So what have we accomplished if all we've done is we've just made a very volatile version of the S&P 500? If it is an alternative financial system, it should be trading at like a zero correlation, but it really isn't or hasn't been since all of this excitement about these ETFs has really come on board with this. And then my final concern is what we're seeing with this huge rush of money, all of these people online getting very, very excited about this. Is this reminiscent of anything? And to me, yes, it is. Of GameStop and Reddit. When everybody got all excited using Reddit, the Reddit message boards to buy GameStop, to run it up to, insane levels of price from $4 to like 500 or some crazy number like that. It wound up getting everybody believing that this was going to be the quick way to become rich. We were all going to become Roaring Kitty. If you remember the movie or if you remember the story from then, we were all going to become billionaires overnight. And I hear a lot of that in this space as well too. Look, I'm bullish on the space if you build out an alternative financial system that you could present to the world to do something to help them store their wealth, trade their wealth, protect their wealth. I think that's great. I think there's tremendous upside. If you want to turn this into a trading sardine on the New York Stock Exchange that we could punt around because it's exciting, because it's got a lot of volatility, it's never going to fulfill that promise. And what I'm afraid of is what we're doing is we're turning it into a trading sardine. We're not going to attract more VC money or more developers. They're going to say, VC, do new startups and development. That's hard. That's uncertain. I'll just buy the ETF and watch number go up, and I'll become wealthy that way. I think it will detract from the story if it continues to be this, this overwhelming thing that just consumes all of the narrative and consumes all of the money. So I see this as a potentially okay thing that you want to bring in people to get them more aware. But if you want to bring them into some kind of ridiculous mania that is reminiscent of GameStop, it might wind up the same way as the meme stocks wound up, for at the end of the day. Now, look, a lot of the meme stocks survived, some of them didn't, and they did rebound. And Bitcoin can do that too, but it's just another thing to kind of get in the way of what I think cryptocurrency's primary mission should be, and that is to create an alternative financial system. It's not enough, to speak to my Bitcoin maxi friends, it is not enough to say we have Bitcoin, it has a hard cap of 21 million. Perfect, that's it. That's all the world needs is just this one thing, nothing else. It needs a whole ecosystem around it. It needs trading, it needs transfers, it needs lending, it needs borrowing, it needs insurance, it needs all of these things to come about. The Ethereum network has been doing that by creating decentralized finance. They're trying to bring decentralized finance to the blockchain network, and that is, I'm very encouraged by that too. So it needs more of that. It just doesn't need Bitcoin and everybody pile into it because it has an inflation rate. I mean, the number of Bitcoins expands by 2% a year. That's good, and no one can change that. That's good too. But that's just the start. That's not the end of the story. It needs a lot more than that. So hopefully we're going to get back, or hopefully the mission of developing won't get sidetracked by this show that we've seen. I'd like to think it won't, but I fear that it does. And we'll have to see how this plays out.
Jim, thank you for your thoughts today, and thank you everyone for joining us. If you have any questions on Arbor Research, Bianco Research, or Arbor Data Science, you can contact us by emailing Gus Handler at gus.handler@arborresearch.com. Thanks again, and have a great day.